Welcome to the weekly Forex recap brought to you by Admiral Markets. My name is Chris and I will be reviewing, as always, the Euro, Pound, Aussie, USD, and the Dollar, Yen. First of all, though, be aware that this video is intended for a global audience and may not be suitable for everyone. Therefore, take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for that and other conditions and details. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only, and by continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. Alright, first pair on the menu here is the AUDUSD, taking a look at the 4-hour chart. And last week I was talking about break either to the downside, below support, or to the upside, above resistance. And of course, price was in a very nice contracting wedge as indicated by these two green lines. So last week we did get the break. Price broke to the upside and completed a up ABC zigzag. As you can see here, you can see price hitting the 61.8 fib of the purple fib, right? Where I have the green circle and going up to the minus 61.8 target. That was a good bounce and breakout. The breakout is last week. Price is now, however, moving down pretty quickly. So is this maybe a false break or more downside, or just a hook back for more upside? In fact, both are possible, as always in Forex, but my primary level of interest is this bottom. As soon as this bottom gets broken, and of course this support trend line, then I'm expecting the breakout to the downside. As long as that does not happen, I think that there's still, despite this momentum here, that this could just be a pullback for more upside. So I'm definitely keeping on a potential bounce to the upside. And if I zoom into, for instance, the 50-minute world, and put a fib on this momentum down, I can see that the purple target, the minus 272 target here, is equal to the 635, could be a bouncing spot. I'm going to keep an eye on price action and see how it responds to that. The same thing for the minus 61.8 target and the 78.6 fib that equal the broken trend line. That is also a very nice confluence zone for a potential bounce. So I'm keeping an eye on these two levels and see if there's any interesting price action candlestick patterns on our 4-hour chart to be found at those for a bounce. And ultimately, of course, if you look at the weekly chart, I would not expect this low to be does get broken, then the bullishness is not present anymore on this AUDUSD. All right, next on the list is this dollar versus yen 4-hour chart yet again, and I have an orange line the highs on the price and the oscillator. You can see that we do have a higher high, but we don't have a high on price, but not a higher high on the oscillator. It's clearly a lower high here, very much so. In fact, a lot of difference there with the oscillator. So there is a single divergence present on this 4-hour chart. From that point of view, I'm expecting a bigger correction down to at least this long-term moving average at 122. If I zoom in to the hourly chart, I can see that price has made a impulse here, a bearish impulse, indicating already some weakness to the upside, and the price is now retracing that off of the bounce of this trend line here, retracing part of that downside. All right, so that's why I have a fib from this top to this bottom, and you can see that I'm expecting these levels to be resistance. Now, normally I would not do that because it is an uptrend, so I would expect it to continue, but because of the divergence that I already mentioned, I might expect here a turnaround zone. And that's why these are, in my opinion, resistance. All right, so just to be clear, yes, it is an uptrend, but because of the divergence, I'm expecting these fibs to be resistance, and price could, for instance, pull back to this level. That could be maybe a kind of a head and shoulders pattern like that, which could be the turnaround spot. And I'm expecting price to fall down to the 61.8 target, 122, which is also equal to the 4-hour moving average, as you can see at 122. The reason why it could be a bouncing spot here to the downside is the fact that if you put a fib, I think it was from here to here, that's one way you can see hitting the 78.6 fib, or from here to here also hitting the 78.6. Obviously that's a big level, a big fib, 123.75. So price hit that level, reverse back. As you can see, if I zoom in, you can see price hit that level and fell, respecting that level, and we could see a follow through off of that level. If price manages to break above that 78.6 fib, well then there is some breakout potential to the upside, up to the 88.6 fib, and perhaps even higher, up to retest the top again at 125.80. Before I move on to the Eurodollar and cable, take a look at the weekly webinars we have lined up for this week. We got weekly FX recap on Monday with Nenad, and Wednesday he's going to take a look at price action trading school. Tuesday and Wednesday I'm going to review moving average trading and strategy on Wednesday, and on Thursday Nenad and I together are going to take a look at range bars, how to use range bars in Forex trading. So I think we got a great lineup, great weekly schedule here. Hope to see you in one of these webinars. All right, next on the list, Eurodollar 4-hour chart, and there's a green line here connecting multiple bottoms and definitely have double divergence at this moment on the Eurodollar. So that is already a sign that this downtrend could be serious. Double divergence on a 4-hour chart is certainly something that I do not underestimate, especially if it's this close near a key critical bottom and yearly low of 104.50. So myself, I personally am not going to be trading to the downside at this moment due to all these support factors. In fact, I'm looking up that if I put it from this bottom to this top, right, that bottom did get broken, but I consider it still a bullish environment as long as price really doesn't break below the 104.50 bottom. If it does break below 105.60, it's a 38.2 fib, then in that case, this is not a correction anymore. So a break below 105.60 could see price fall to 105 and then down to 104.50. So that's a key level in my opinion for bull or bear. As long as it stays above 105.60, I'm a bit definitely hesitant to trade it to the downside, and actually keeping an eye on a 4-hour candle, but just looks more like a doji in fact, and I don't think it's really that strong. It is a pin bar. I've seen better pin bars. Probably looking for a second 4-hour candle to kind of confirm and seal the deal, and maybe look for a retracement perhaps of that candle halfway, and then look for a bit of a reversal trade. But that's my maybe contrarian view. I don't know. It is a downtrend, but I see a lot of support. I see a year low, a bottom, double divergence. So from that point of view, I do think that there could be a bit of a correction here on this Eurodollar as this week starts out. Of course, we do have some news events. Take a look at the schedule, of course, as always. And there is Thanksgiving holiday, so the market might slow down in the US. Market might slow down, therefore, in the whole world on Thursday and Friday. Something to be aware of. Pound USD is falling. It is in a breakout, bearish breakout to the downside. It has broken this 4-hour or 1-hour support trend line indicated here by green. And price is breaking through down pretty fast. This is a good breakout, I think, with lots of momentum. And this was actually a nice little bear flag right in here. And that breakout is already moving nicely to the downside. And well, that trade, of course, already is behind us and happened just not so long ago. I do think, though, that in the future, if we get similar bear flags, for instance, that hook back to the same resistance spot here and the same bear flag level, that there could be another bear flag and break. And this could keep going, in fact. All these smaller bear flags, I think, are interesting to take. Now, why do I like these smaller bear flag breaks? Because sometimes, of course, if a break, you might not be jumping for joy to take these because there could be a bigger retracement occurring at some point. And that's something that I'm not all too worried about at this moment, because if I look at the breakout on a 4-hour chart, I think that there is still space to break this bottom. So from that point of view, I'm expecting a follow through and not really much of a pullback. If there is a pullback, then I would say max to the 38.2 fib before continuing lower. So that's my opinion at the moment. I'm not expecting a deep pullback here. More shallow pullbacks and continuations on this pound dollar, at least to break this bottom. When it breaks that bottom, though, definitely bumping into support, as you can see. Good trend line here. We are in this channel, roughly like this, right? A bit of an overthrow here, but that's okay. This channel, very strong. So if price breaks this bottom, though, I would be careful and start thinking about taking profit at 150-ish because of the psychological round level, but also because of this bottom of this. So from that point of view, still some space left to the downside, but be aware of that bottom as mentioned here on the 4-hour chart. All right, thank you for joining the weekly recap. Hope to see you in the webinars and take a look at Admiral Markets in social media. A lot of great content being released every day. Thanks for joining, and wish you all good trading. Cheers.